You guys should be able to hear me, but I probably sound different because, can you hear me? Sounds good. Probably don't sound the same though. My software is all bugging out today. Can you guys hear me? Check, check. Probably sounds different though, doesn't it? Is there any double sounds? Hey, good morning. All right. Nice and rational. We'll have to kind of wing the DD bands today, so I don't have time to do them. Actually, maybe so. Hold on. I was gonna just wing a guess where they would be. Good morning, team. Hit that like button while you're here. Let's go. Let's go. Start us off good. Give that algo scratch on its back. For some reason, I'm trying to figure out what happened, and I know there was spilled a glass of water on my board here, so that's probably why it doesn't like me so much. But it was a couple weeks ago, so maybe just finally started shorting out. Mic goes output. Check. Oh, here we go. Here we go. I think I know what I did. Okay, hold on. Is it there now? Can y'all hear me still? There we go. That's better. Fixed it. We're back. Let's keep our fingers crossed today. You right here, inside of DD bands, we have rational, so don't let go of any kind of catalyst or anything, which is good. VIX is in decay, which is awesome. We're inside the risk interval band, so things are looking nice and tidy. If that music's too loud, let me know. No double, no feedback. Cool, Mike, thank you. Glad to hear it. Okay, give me 1 second. Let me open up my top secret files here. Y'all can't see them. Oh crap, the formula for hedge pressure. Oh no, I showed it to everyone. Just kidding. Hold up. Good morning, guys and girls. Futures data. I know. We got so many things that are like urgent. I know I'm stressing out my team. I'm like, I need this tomorrow. I need everything tomorrow. Do it now. They love me though, I think. They would just say that. And maybe they actually just tolerate me. Hold on, wait. Let's make sure I got these correct. Let me do bands real quick. Dynamics running these. Okay, let's do them. I don't know if I did them yesterday. I did run the bot yesterday. Make sure it's the right number. 4,852. Okay, perfect. Okay. That is correct. Okay, let's get these really quick. See me where they are right now. It's the DD band bot. I'm running this really quick. Please give me. I'm on a podcast this morning with Little Financial, so if it is a little quiet sometimes, so I'm just talking there. I'll try to leave the mic on here for this. Okay, 40252 right here. Retake. We're gonna do 396.64. We're gonna do both this, and let's pop out another instance so we can have QQ front and center. Save my chart layout. We have that feature now, which is lovely, saving chart layout. I need to get that resilience. Delete. can click this. Oh, how lovely. Save my layout. That's I'm dancing. Don't pay attention to me. Market opens in a minute. Market opens in a second, I mean. Search right out the door of any illiquidity pockets. Leave that here, front and center. Multiple window view. Yeah, you do it this way. We're not building internally to the chart. We're doing instead a more sophisticated window layout. So you can actually move your windows around. I know you want multi-charts like in trading view, but it's better to make it this way for obvious reasons later, which I'll talk about in a little bit. Market's open. Get ready to get going here. Hold on, one second. Accept. Okay, put it back in there. Thank you. Turn the sound down. Thank you, babe. All right, yes. All right, now we're getting ready to get going. No, you're not doing something wrong. The data just needs to be calculated to come through. So we're just waiting for that data to come in. We are BLD. Well, actually, let's get SPY really quick. There's a thing that we need. We're creating this way where it paths in the data to you without you having to refresh. So right now you just have to refresh the data on your own. And we're trying to patch that in where it'll send it to you without you having to refresh. So it's just it's an artifact of the way it was designed, and we've been trying to fix it, but new things pop up all the time. So it's on the agenda to be fixed right now as the next patch. So right now we're in a BSD. Unfortunately, this is not the best setup. Let's make sure we open. Actually, no, there's a hedge pressure break. They're irrational to the downside below 401. Not the best sign in the world. I will trade slow from 401 to 402.5 on the long side, but hedge pressure break to the down, not the best. DD is positive, so we're likely to support here. I might take a small little long off of there to follow the DD rule, but it is irrational, so we can't take that rule with a grain of salt, right? So, okay, so right out the door, I don't like what I see. We're gonna take a look at resilience as positive, which is great, which means we're likely supporting there. So we have an interesting read this morning. I will just kind of chime in on this. We have 401.5 is that hedge pressure on SPY. Right out the door, we're breaking it to the downside with a positive DD number, which is our bull bear bias ratio. So we have a bullish positional setup with now bearish gamma squeeze kind of pushing against each other. 401, if there's support, it's at 401, but if there's resistance, it's right at 402. We're gonna be in a sandwich day today, and I don't really think that it's gonna move too much higher. So I don't see any bull setups this morning. A breakout would be very unlikely, but 402 on the S&P would be breakout. 298 on QQQ would be breakout. There's a 300 bear zone rock wall resistance on QQQ. So today is a limited upside day without a catalyst to push us forward. I don't really see any evidence of a bull move, unfortunately, out the door. So resilience is nice and strong, which means the gap up is going to stay strong, but there is a support at 400 on SPY. So like I said, for the gap reason. So everything's pointing in different directions, which always means choppy day, wide day. So that's good. I'm going to find boundaries and play. 402 is a nice short setup because we're opening below monthly hedge pressure. That means monthly gamma exposure, downward gamma exposure, the way we define it. So the gamma is going to be negative for those monthly options. And so 402 short, but down to 401. Like I said, it's a nice tight range for me today. And I really think that that's the play, but a break of 402 is a bull squeeze, and I'll immediately flip long if we get that with some velocity. So I'm still slightly short-minded today, but not for selling to lower lows. We're going to stay internal to yesterday's candle, so I don't think we break yesterday's lows either. It's pretty good. Pretty decent relaxation day without a crash. So that's my analysis this morning. And I'm showing it on my screen if anybody wants to see it. The link is on my Twitter feed. I think I like that 402 short. I think I'm going to take a 402 short on a BSD today. Right? Here to here. We did open above, so it's actually a BLD on the upside with the hedge break to the downside. It's irrational right out the door. Irrational, right? BLD. It's going to support here. This is an interesting setup day. This is a really challenging one, especially if you're new to rock scooters. So there's not an easy trade setup here, and the R&R is kind of booty, right? It opened at BLD, which is that setup here, right? That's how I do it. Let's pick a different color. What's everyone's favorite color? Hot pink. Let's go. BLD is like this. There's a setup here to here. It's a hedge pressure break. It's irrational below, right? Window is closed. Irrational is hard to rationalize. This is dropping really quick. That's normally support when rational, so we can't use this rule that easily. But it's still, like I said, probabilities are higher that it does support here rather than it goes there, but we talked about this yesterday. Remember, you can't rationalize it being overwhelming. In a rational market, when that's greater than half, what, 96% back test, remember back test numbers, when rational, this tells me we stay in the bull zone. But when irrational, you can't rationalize any of it. So the answer is there's no setup with it. And be careful here because we are likely going to get some volatility. Let me double check UVXY right here in the corner. Let's pull out some plays. If you guys have not seen the Rocket Scooter free trial or the extended trial, oh my gosh, I'm gonna get you guys in here. If you want to check this out, this is something super cool. I'm short-minded from 402. That's all I'm gonna do today. Let's find some setups though. Let's find some illiquidity pockets and let's look for anything that's going to show up there. My illiquidity pockets, can somebody test this really quick? I think I need to reset my cookies in my browser, but when I load illiquidity pockets, things load up and disappear. So let me know if that also is something y'all are experiencing, or is that just a thing for me? My scanner is looking really cool today. Let's pull up some numbers. I'm multitasking, so I'm all over it. IBM is strong day. Yeah. Go here if you guys want to check something out. We're doing this awesome program, $35 a month. And I swear we're about to pass our 1,000th person who has clicked that link and signed up for something in the last 13 days. We've like tripled in size, which is crazy. So that's why we're doing a 6-week training program, and the entire world can get on it for just the cost of the data feeds to the platform. We invite you to check it out. We're on week 2. You can catch up very rapidly, of course, this weekend. If you've been through the training program, don't mind give a little blurb. Maybe it's your first week here, your first couple days here. Can you tell me what you think about it? So anybody new here can check it out too. It's not like anything else out there. I'll guarantee you that. At least in my opinion. Okay, so we are in a liquidity pocket. Market's random here. We're going to take a look at resilience very rapidly. Let me put the resilience right on the chart. Okay, so when markets are irrational, breaking through hedge pressure, irrational. Resilience is going to delay. DD is going to be off. It's not going to be the easiest thing to look at. So as we see that the DD number being 0.6 implies that we would support there, but being irrational, I can't support it with any large amount of confidence. So I'm a little worried about today's market. I don't think we fall too much further, but there is a liquidity pocket here and half gap here matching. So I think we might trade a little lower, hit that half gap. Resiliences are strong in S&P, but weak in NASDAQ. So even a weaker resilience in NASDAQ means that we are resisting down to the lows. So we are likely trading lower today. Unfortunately, I don't see any particular support coming through. Now, if S&P resilience hits 0 and goes lower, this is resisting and we're going to fill the gap. It could be a really nasty fall today and probably supporting here. So my guess from here is, let's double check to make sure this is not irrational right there. Okay, so we are a BSU on, yeah, so we're coming down a little bit. BSU has support to here though. So inside of here, we are pushing to there and supporting in there. This is today. So I'm deciding if I want to short and then flip long. I very rarely do that. The extended trial thing before it goes away. We want to get everybody into it. Y'all are our guinea pigs. You get to try out the $200 a month program for $35 a month for 3 months. Hey guys, do me a favor. Y'all go into Discord and give Slacks and Thanimal pats on the back. They've been helping so much around the house, and they're amazing, amazing folks. I'd love to short off 402, to be honest. That'd also be the upper DD band, very close to it. Nothing yet, nothing yet. I do want to short off of there. I'm glad I waited. I'm glad I waited. There is that DD support. But again, it's irrational, so it's hard to rationalize. That's going to be really strong. I'm going to do 5 from here and 5 more from there, and then I'm going to flip long if it does squeeze. This is right at 0, so it's really, this is a gamble day. I could lose a streak on a gamble day. If this is really negative, I'd be more inclined to think we're going to resist 402, but I'm shorting to illiquid pocket from here to here. Small part here to there. Remember, I only add to my position on green candles. Very small here. This is strong. See, the thing is that when you're irrational, you have to take all your indications with a grain of salt. This is irrational trading day, everybody. So watch me maneuver it. It's a gamble day. Small position. Resistance there for the BSD trade down. Again, you don't use liquidity maps as we teach in the first 3 months of trading. Like, you analyze this with a grain of salt. Buyers and sellers should be there, but again, irrational, things go a little crazier. DD is strong, which means this likely supports, but again, when irrational, take with a grain of salt. It's strong enough that I might get squeezed out. Oh, one second. We're back to rational. Back to rational. We are supporting here, like we said. Market's rational. I'm going to be back to here. This is going to be a really bad trade if I lose. So I know I'm going to get out. We are rational again in a BLD. So now I'm going to hit it hard at monthly hedge. BLD. I'm going to hit it hard at monthly hedge from here back to there. I'm going to double down and squeeze myself out of this loss. I'm going to buy some chunks here. Woo! Look at that slam down. Okay. I need to add to my position here. We are caution right now. Now window of opportunity is back open and window of opportunity is closed up here. The only window of opportunity we have is inside of here. Market's rational. Remember the back test, 89%. We stay above hedge pressure. This means that here it is. I have to, the only way I'm going to save the streak is if I get a nice. Okay, I need to get a really quick scalp, and I'm going to get out of this. Turn this to a win. A break of hedge pressure is a really strong pivot up. Now we are rational. Now upper DD band is that final limit. I'm going to get a scalp. I'm going to close out half. ES is very close. Let me look at the my spreadsheet here. Find where that ES band is. We're looking at high SPY 402.56. Let me line this up. Yeah, it's right about there. Okay. So my final entries are 40.32.75. As you see, I'm getting a little bit of push off of monthly. Monthly resilience is still right at 0, so this is scary. I might get a gamma squeeze against me, but I am in max position, rational BLD short. That's it. I'm looking to trade down to here. Let's look at Nasdaq resilience. It's negative. Ooh, this might actually lose the streak. I'm going to be very tight. If I can turn this into a win, I'm going to try to call it a day. I just doubled down on my short for a nice scalp. The region we're in now is a very curious spot. So what I'm trying to do is I'm going to try to trade from 402 down to 401.5 and trim my position out and try to turn this L into a W. I am expecting a lot of resistance on 402. That monthly hedge pressure resilience, which is a tiebreaker at that 402 level, is hugging 0. So to me, this could be a streak ending day. The excitement is real in the stream today. So this is my 20th day in the streak. I've won the first 19 days without a red day. So if this is the first loss I take, it's the first loss I take. But I'm pretty much convinced I can short from 402 to 401.5 and just call it quits. If I get that trade, I'll turn this red into a green, hopefully. But this is pretty nice. So the market's rational again between those two levels, and it's gonna be a really interesting setup. Resilience is an indication that helps me see if the market's going to gap and go or gap and fill. It's nice and strong, so this gap up is likely to hold today. But still, we're in that bearish kind of gamma pressure, so it's like pushing down and pushing up all at the same time. And that volatility kind of in decay right now is not helping the idea that a short trade that I want to take is likely to get some volatility to pull us down. So I might get squeezed out of this, but I am slightly turning green on the day for this resistance, but it is a very tight trade. Normally, inside of these rational windows, the pivots are really sharp. Yeah, it hit 402. You can see for the last 2 minutes, there's some nice red candles coming off of that. So when I watch this, I'm just looking for a little scalp. And then from here, I'm going to see if the dynamics change of the market. We have a nice strong bull bias from 401. We have a nice strong gap support at 400, right? So that's, and then we have monthly hedge pressure resilience is showing that there's a likely chance for a gamma squeeze. So I might lose today on bad luck, but we'll see. We're right at the top of those rational bands. We call them the DD numbers. And that is going to be on the S&P right at 402.5. So if we break through 402 and go up to 402.5, the acceleration could be pretty strong. The only thing that's giving me some idea that the market might turn around is Nasdaq itself. The QQQs are very weak today. They're much weaker than the S&P, and that opened really strongly in what we call a bull short up on our liquidity map, which is a bullish setup, but resisting hedge pressure. So it's a bullish setup that opened right at the top of the bullish setup. So I'm staring at Nasdaq today and seeing if the Nasdaq's going to trade lower. And I'm trying to see if there's any plays in the Nasdaq that are showing high probability of pulling back, like individual stocks. And so I'm about to run the scanner really quick to see if there's any stocks I need to eyeball. But other than that, I'm just going to hold out for this and see if I can't get about a 10-point drop, close it out, call it a day. and then see what I'm going to do from here, because I don't really see a lot of bullish momentum, but I do see the market having a hard time coming down. So, but I'm not shorting it for lower lows. I'm just getting a tiny little scalp, 10 points if I can get it. Let's see. We're not outside the DD band, Bright. There it goes, there it goes. Okay. Mode 2 resilience means that we're supporting right here. So it's going to be really hard to break. So new setup is here. That's gonna be a problem. Mode 2 resilience right here. We're rational in here. So in the rational window, everything's kind of turned back on. This is, we're literally, I've got this to dig out of a loss today, and that's it. Let's see if I can do it. This being rational and this going above zero, not good for my position. We're likely to break through and go up higher. BSU as well. So I might get unlucky on this one, but this, I love these strong trades like this, here to here. So the thing is that hedge pressure break on QQQ would pair up with a hedge break on, let's see where the numbers are on Qs. The question is, I know that high upper doomsday band will be likely a resistance if we push through. So my question is up in here. So monthly hedge, we're now irrational again to the upside. I need to work on trimming my position, but we're right on the edge. I might double down here to trade back down. Like I said, we are right. This is an illiquidity pocket. So on QQQ, I might get a rapid push against me, and I have to decide right now, do I want to trim this really quick and try to fight the loss later, or hang on to this? Let's do a quick R&R calc, 298.53. I have a spreadsheet on the side that shows the upper QQ band is right there. So if we go irrational here, is a rapid move to 300. So I don't like seeing that. So my thought is that we touch the upper band before the lower band when rational. We are currently rational in here. Squeezing higher on some irrationality. Support there. Remember, we always say that this number hints that this will be support. And when it's rational, it's overwhelmingly good. It's like 96% of the time, bull side stays bullish. I'm not betting on a trade all the way down to there. But when it is irrational, like on a hedge break, you can't use a strong probability because those probabilities were based on a rational market. So when irrational, it's really hard to predict or determine the strength of any tool. So we say throw out all your indications and try not to use them. Take them with a grain of salt. What I like to do is see if that DD is overwhelmingly bullish or bearish. So it's very overwhelmingly bullish right now. It's 66 is pretty strong. Monthly hedge pressure resilience right here being strong as well is a tiebreaker at yellow. So all of these things are telling me I'm about to get squeezed, right? So my question is, do I care enough to wait till there to short? Up here, I'm pretty much done, right? If the market goes up here and then comes back down and resilience is negative, right? Negative resilience inside of the rational range. Okay, this is what I'm gonna look for. When rational, if resilience is negative, that's a sign we're going down. But the problem is if monthly hedge resilience is positive, so I might lose the streak today, you guys, and I already know it. I'm gonna be very lucky if I don't. So monthly res, and again, in a rational market, you have to take it with a grain of salt. So try to see if it's really strong. Monthly res greater than 0 is a hedge pressure break from here to here. If rational, DD greater than half is there as well. When rational, right? When rational, and all these require rational. The problem is you're irrational here and irrational here. So your probabilities are random and skewed. It's hard to tell what they will be. This being close to 0, it's not really strong. I'm not that scared of being squeezed. If this number was like 10, 15, 20, 30%, I'd be a little worried about getting squeezed. So what we're gonna do is pull on the scanner. Let's look for those monthly hedge breakups and stocks. Okay, so we can look for. I trimmed a little bit. I'm waiting for it. All signs are looking pretty okay-ish, but I think I might get a little squeeze again to 402.50. But I think that the market is just trying to respond to this opening pressure, and signs do look more like it's going to go up than down, but I still think that I'm going to hang on to it because I just did a risk and reward calc. At minimum, I'm going to lose maybe 300 something bucks on the account, but you know, we're up 41% in the 3-week span, so the R&R is pretty good for me to hang on, but I'm waiting for some conditions to arise to show me that volatility I want to see. So hanging on a little bit, but I'm not chasing along from here. If it does squeeze me out, I think I'm just gonna sit on the sidelines and let it do its thing, because we are at the upper limit of what we call the DD band, which is a futures thing, and we monitor futures even when trading stocks and equities products, and the futures limits basically show when the market can spiral out of control or not. So we're kind of near that upper band, and breaking through that upper band is, like I said, going to squeeze me pretty hard. Typically I like to in these environments, like to take a short and just kind of let the momentum of the upside dry out, and then the short eventually plays out later in the day. But my stops are nice and set. I mean, it's not really anything that's out of control. So just trying to maintain control in the position, getting in a little bit, getting out a little bit, and just building a good cost basis right there where I want to be short at. So just a scalp today. I don't think we break lower lows on yesterday, but I do like what I see. Still not super strong on the bull side, but the bullish numbers are presenting themselves slightly stronger as the minutes go by. So I might get a surprise squeeze on this, but limited upside. If we run, QQQ would probably limit the run at about 300. So the question is, what happens when we get there if we do squeeze? So 298 on Qs is a really strong resistance. I'm betting that hangs on and drags the SPY down because I'm trading ES futures today. If that happens, I look pretty good on the trade. Other than that, SPY is looking really strong, and that might pull the QQ out. So it's sometimes cool days like this when you get competing indications. It becomes a fun and challenging puzzle to solve. And it's all about risk management, how you manage it. It's kind of like getting, you know, dealt a 12 in blackjack. You know, what do you do? Well, there's a million ways to play a 12, right? So on the first 2 cards you see. So this is a little bit of like, I'm trying to trade little small scalps here to play with my cost basis and just dig myself positive. But I don't really see any signs that the market's going to go down today just yet. And it's starting to kind of push a little bit against me. So we'll see. But again, when trading, right, it's all about how you manage a loss as well. So part of the art form and skill set of a trader is being able to trade within the limits of what you see and knowing exactly when you're wrong. And that's one of the things that our program focuses on, especially in the first week of training, is if you never knew how to identify when you're wrong in a trade, sometimes you just hold all day and hope for it to turn around. And you know, the live streams is just where I can show how I manage losses and play with losses and try to keep my cool and still do calculations about how my risk is playing out. And that's really what we want to make sure that people get a chance to take our trial. Wolf has been saying it, but our $199 a month full platform with the full education, with all the cool stuff that comes with it, we're making it $35 so you guys can all learn trading for, you know, the price of a drink at a bar. So, I mean, we want everyone to kind of just go through this and take this information with you. How to manage losses is the difference between a career trader and a failed gambler. So this is kind of cool. I love when losses present themselves on the stream and I get to fight my way out of it. So welcome you all to come check it out while we're doing this, because we're live on YouTube right now. But I don't see anything. I'm looking actually right now for these breakups. Actually, let me talk about one more thing. On the scanner, we can actually pull up different, you know, we talk about hedge pressure and some of these numbers, but on the scanner, we can actually pull a specific trade plan. One of the neat things that I can do here is I can find bull setups and bear setups from the scanner. So as of right now, I'm scanning for stocks that could be rallying through and causing the entire index to move, right? So I look at these breakup cases of any of the hedge pressure breaks, right, which causes a gamma squeeze, which makes the stock just run really fast. And when I pull up on the scanner, I can kind of see, you know, which ones have moved really quickly, and I can see like United Airlines is on there, SARK is on there, TEVA is on there, Pfizer's on there, so and Beyond is on there. So I can find stocks that are actually moving and creating that momentum, so I can actually pull them off to the side and watch them as well. Like if Tesla was the big mover causing the Nasdaq to move around, then I would be watching Tesla to see if it hits a support or resistance to also support my trade. So it looks like I got that quick little dip I was trying to get, and it did pull positive. I did turn green for the day, which is good. I'm trimming my position. Yep, green. Yep, I'm in. I just trimmed my position right back down. Let's see. Let's go ahead and close out while I'm green. Okay, I turned that green. Those are the hedge pressure scalps. Turn a loss to a win. Closed out. Don't like the rest of the day, so I'm going to call it. But hey, that was pretty good maneuvering. So how about that? Ashton, what are you doing today, man? Are you selling call spreads off of monthly hedge or above monthly hedge, or what's your plan today on your side? He's busy selling call spreads, I bet. Hey, Vegas. By the way, I loved your pod on YouTube. I watched it. You and Joe? That was awesome. Done. Calling it a day. Don't want to mess with this. Y'all smash that like button if you're here, by the way. Smash that like button. Let's go, let's go. Hyper Alpha says, what is the probability of this short working from here to here? I think you missed yesterday's class, but let me talk about it real quick. When rational, okay, that's where our boundary conditions are set for the statistics. Anything that's irrational, we don't have. It's immeasurable, and it would be impossible, or not impossible. It would be a fruitless effort to chase finding a statistic for it, because irrational is irrational. So when markets are rational, again, take this with a grain of salt, and I tell everybody this. When rational, which means all 5 rules are good, and when non-random, 3 rules. The probability of the following back-tested only SPY was that if you open in the bull zone, you close in the bull zone 96.6% of the time. When DD is greater than 1/2, only when rational. Okay, oops, let me scroll up here. Okay. So if rational, that's the percent, but clearly it's irrational. So it would be immeasurable or fruitless to rationalize, right? Like if I were to say, what is the probability here? I'd have to measure the probabilities while the conditions are irrational. And that would require me to rationalize a statistic while irrational. And the rule of irrational is you don't rationalize anything, including probabilities. Do y'all understand that? So we always use the word irrational. It means you can't rationalize anything, which, like, what does that mean, right? Well, rational means like a logical, plausible conclusion. For example, if the market rallies and falls to my 50 fib, I'm going to buy a support because, well, it usually supports there. When rational, you're going to have a much greater chance of your rationalization playing out. When irrational, don't make an assumption that you can rationalize that indicator works. Or if it's like, if my moving averages cross over, I usually long because the market reverses. When rational, we'll have a higher probability of that rationalization or that observation that you have that works 70-80% of the time is no longer a solid probability when irrational. Do we all understand that? Rationalize the irrational by rationing your rations. Can you get that on a t-shirt? And I'll buy like everyone a copy of that t-shirt on the back. Like a cartoon picture of my face, like pointing in the air with a cartoon bubble that says irrational markets. And on the back, you can put that slogan. Thank you, thank you, thank you, thank you. 20-day streak. But again, I have to always say, my trading results, obviously I've been trading for a long time. So just to be fair, and obviously ethical, we can't just say that, my trading results obviously can't indicate anyone else's. I've been doing this for a very long time. And, but the education alone is what we want people to really come into. We train not only on how to use a platform or some tools, but we really train you on how to keep your cool and have risk management, actual risk management rules. And that's the biggest part, I think, of Rockets Gear. I think everybody's favorite part. The training is not like, here's some charts, here's some things, check it out, do this when it's there. The training kind of feels like boot camp. We actually drill you and train you and force you to practice things. It's an experience, I think, that's unlike any other, because people have just, like Ashton's folks came over, and I think after a couple days, they're just like, okay, this is why Matt and Ashton knows. Ashton's one of the best traders I know. And his folks are all really talented. So I was kind of nervous to show them our program, because I'm like, oh, they're gonna hate it because they're so good. And they were like, wow, this is cool. So like right out the door, training you on risk management is our primary focus. And I promise none of you really have a good risk management system, because no one does. We never did. And if you've been trading for a couple of years and you struggle with knowing, like, when are you wrong? How are you betting too much? Are you trading too often? Are you over trading? Like things like that. We have discrete indications that can tell you that, you are over trading because this is happening. And it's not like, a feel good slogan, like, well, just stop over trading and start using risk management. Everybody doesn't even know what that means. It just sounds cool. We're like, when 5 of these things happen, you should probably sit out of the day. Why? Well, because historically, when any one of these things happen, markets go crazy. And you can only trade like today's a crazy market. The trade I made was in what we call irrational territory. And it's like, well, I've been trading long enough to know how to handle it, keep my risk a certain way. But if you're new, you could get caught in one of those deer in the headlight moments, right? Where you get caught upside down and you don't know when you're wrong and you freeze, and then you start flip-flopping and trying to chase, and you get loss of control, right? And in those moments, it's like the next day you wake up and look at your account and it's 0, and you wish you just didn't wake up the previous day. You're like, man, I wish I wouldn't have touched it. It's like those kind of days, we can identify those days the minute the market opens. And you'll see me at my tweets, I kind of Babe Ruth a little bit, like, hey, irrational, I'm sitting out today. The market whipsaws all day, and I didn't go out there and drain my emotional capital. As a trader who always struggled with ego and emotions, I had to create rules that I wouldn't break to keep myself with a risk management plan. So we are risk management focused right out the door. So if that's what you're missing, we'll give you a starting point for your own risk management journey. So we invite you all to come catch up, because we're about a week into the program, and week 2 is going to be talking about all these things. We're talking about hedge pressures, resilience TD, like we call the big 3 indications. So risk management's the first week, and chime in today. We're gonna have a really cool lesson today, and we actually start in 2 hours. So if you come check it out, send us a message. Go to the Rocket Cedar account, maybe say, so just send me a message real quick, and we'll give you information about how to get in to that if y'all want to come check out the program. And y'all could cancel anytime. There's no obligation to stay. So yeah, it was a great short. I got out where I wanted to get out, called it a day. I managed to turn my trade green. So this is pretty good. I feel lucky. Thank you, luck. But obviously I managed to trade very well, and talk to you guys the whole way through my trade. I kind of demonstrated what I was doing as well. So I'm going to pass the mic on. Ashton, you there? Are you busy? I agree. We are likely to do so, and that is the resilience indication he's talking about. So we have a cool little arbitrage meter that points at when the S&P and the stocks that it represents are deviating enough where there's a trade opportunity. It's kind of neat. There's a lot of typical indications out there that try to make a similar assessment, like advance and decline difference, tick and trend. They show advances and declines in the market, right? So what this actually shows is a really neat concept that exploits how market makers try to price liquidity when there's imbalances overnight. So have you ever heard New York Stock Exchange say, the 200,000 share imbalance on this stock, blah, blah, blah. Well, in the morning it gaps up or down, and the whole next couple of minutes is the dealers trying to unload that imbalance that they had to take. Dealers meaning market makers, right? So if we sold $1 million to them at the end of the day and the market gaps down, well, they're trying to take that $1 million and unload it to other buyers, right? So you gap down to find buyers, you lower price to find buyers. And so inside of that gap that happens every day, right? Every day a stock will gap up or down. Resilience is a way to exploit that gap to play that imbalance. So you know if the resilience is strong, which it is today, that half gap is, as Wolf said, is likely to bounce. And so when you go there, you can see that there's enough liquidity that the dealers are going to actually have to raise price to fill the gap where that burst of sellers was. And so resilience is one of my favorite scalping tools. I love to use it. And for especially index traders, you know, buying and selling options or trading futures, whatever you do around the index, resilience is an index pivoting machine. I love it. And it was designed to look at that rate of those gaps filling in the stocks and find arbitrage if the S&P is leading or lagging that, and find that opportunity. So right now, resilience is long and strong. And that's why I said earlier, if the market were to fall, I'd be looking at 400 to be that support on the S&P. So I was saying we're sandwiched kind of between 402 and 400 today. That was the battle between monthly hedge and resilience, right? One's pointing up, one's pointing down. So I like to see that I know the market is ranged and tight. I'm not shorting for it to sell off because we're about to hit a possible support. And there you go, right? That's my whole risk management plan. A minute out the door, you know, I drew those boundaries and I know what I wanted to do. So it'd be cool if we bounce off of it for sure. What a crazy day, you guys. I love it. It's hard, and again, having an irrational day is really hard to navigate. And did y'all like how when it turned rational, I traded heavy? Did y'all see that? Y'all want me to go through my trade setup and why I did what I did? You love Rocket Scooter? Well, I love you, Charles Hodge. Scooter McGavin? That's right. Come on. You know, there's a Scooter McGavin Twitter account that I follow. It's so funny. He was it Chris McDonald, the actor? He goes around to golf tours as Scooter McDonald and like actually shows up and does funny Scooter McGavin things. That's 2 thus far, Shooter. Oh, you can count. Good for you. And you can count on me waiting for you in the parking lot. I think it's called Scooter Tours or something like that, but he has a Twitter account. And I thought it was fake, but it is really him because it's actually videos of him. So I don't know if it's someone else, like his publicist doing it, or if it's really him running it, but it's definitely Chris. It's hilarious. And he just rides around a golf car and everybody, all the golf fans are like, Shooter! Scooter McGavin. Quest Funded says, Bright, different data for different exchanges and brokers. Based on trading via the upper risk interval is 40.28, so please explain this. Can you ask that question again, maybe, Bright? I don't understand. The RI band on ES, oh, hold on, start over. Let me start over, my bad. Is it calculated based on the close? Okay, yes, it's based on the close price of futures, but you can't use something like TradingView or another platform that says close. Close is a thing that has platform discrepancies, or discretion. Your platform's data provider can provide close many different ways. What we call close on ES for this calculation is the last traded price at exactly 5 p.m. Eastern, the close of the candle, just like this. The way I do it is here. So if you say close, you need to find out what your platform means by that. Your platform might give you the closing price on futures at the close of the equities market, right? Depending on what kind of data feeds you purchase. They might give you that price, right? 4,000 and some change. So if you go to TradingView or something and look up the close price of something, you're doing it wrong. The way you do it is you go to your chart and you look at the close price, the last traded in, assuming that you have all the exchange in futures. There's only one exchange, right? It's the CME group for the S&P. So you put your mouse right there and that is the close price. It's the last traded price on the 359 candle or 459 candle Eastern. I'm Central. The settlement price and the close price are not the same thing. And this is a lesson in futures. This is why I love for y'all to all come through and learn futures from me. These are things that people don't learn. Futures don't necessarily trade like a stock. A settlement price is not at all seen on a chart. A settlement price is a calculation done and presented to a website. Yeah. The settlement price is not correct for doomsday. Settlement price has to do with a calculation that each individual contract is different. So let me tell you what the settlement price is. Hello, Matt, who studied for the Series 3. Let me tell you what this is. I haven't taken it yet, though, but I did study for it. Settlement price is a calculation done, and I'll explain what it is to make it a little easier to understand. Futures try to predict the price of that commodity at the expiration date of the contract. So let's use oil as an example, right? Oil trades all day in oil futures, and oil barrels trade all day with guys on boats calling guys with phones in refineries trying to, hey, I need oil today. Well, he's not going to go log into TD Ameritrade and start trading some oil contracts. And even so, a retail broker has no outlet to connect to what we call the spot world. The spot world is where you buy the thing the contract represents, like orange juice and bacon and all the fun stuff, right? So a settlement price is an old school thing that while futures are traded to allow, you know, people to guarantee they get a fixed price or hedge their supply or hedge against a drought or hedge against a war, right? You can buy futures that guarantee someone delivers you that item at that expiration date. So if I bought a monthly oil contract because I run a refinery, whoever sold me that contract owes me those barrels of oil, no matter what. It's a contract. They are liable for that. They default on their contract. It's like any defaulted contract. I can sue them. I can get massive monetary damages. You know, everything. It's a contract. You can't default on a contract, right? So the settlement price is a way to calculate every day, every week, and every month the equivalent, you know, value to just state today is the trading. This is the value of that thing today. Trading tries to estimate future value, and they would settle it so that every day you can quote it on a daily basis just to make it easy to make transactions. For instance, if I was a guy that needed a barrel of oil, I call the broker and say, hey, what is the current trading price of oil futures for this month? Because I need oil before the end of the month. And he'll go, well, the settlement price is $60. Even though the futures price are all over the place throughout the day, the settlement price was a way to calculate based on a VWAP where the most likely probabilistic close price would be for that day, not necessarily the last trade. So every contract is different so that you can just accurately quote someone that needed oil at that point in time. If I need oil at the moment, I don't need to wait till the end of the month. I'm saying, well, I need it now. What is the current settlement price? And so that was invented for people to quote each other for a real transaction, right? And you needed a good baseline for everyone to quote from. And now spot price, spot just means a physical world, right? So that's the current last traded barrel of oil between a human and another human. That would be the spot price of oil. They could sell it for $100 even though futures are trading at 50. Doesn't matter, whatever. It's completely two different worlds, but they try to track, like futures are trying to predict what spot price will be at the end of the month. So the settlement window is a period of time where all trades are logged, and then at the end of the window there's a calculation. For S&P, for instance, if the settlement price is actually calculated from it is 4:59:30 to, it's like the last 30 seconds of the trading day. Exactly where the quotes are. I think it is But it's a 30-second window, and it's the VWAP of all trades in those 30 seconds. And then they print that number as the settlement price way after the market closes. As a matter of fact, they print an estimation right when the market closes, the futures market closes, and then they correct it and print any correction after. So it comes out in like 2 waves. So those are printed by the CME group or the exchange that manages the contract. Has nothing to do with the last candle value. It's 314.30 to 315 for S&P futures. And how you find that out is you can go to the CME group and type in like CME settlement price. And so at something like the S&P, right? PES futures. Each contract will have a different settlement price, but the settlement price is not the last traded price. It's the VWAP of a certain range of time so that it will represent the volume weighted price over when funds are mostly trading, right? So, you know, at the end of the day, volume starts to spike up as all those hedge funds and firms put in their final orders. Typically, large institutions will order at the beginning and end of the day, right? So to accurately quote the spot market, like, hey, this is kind of what the price should be. It's not the last human that trades at that last thing. And it's not like in the equities world, when you do have a final print, that's based on mark on close orders. It's a whole different style. So you had that big tall candle at the start and end of the equities day. That's because that's a large burst of all firm orders gobbled up at once. So it's a little bit different in the equities world. Whereas in the futures world, the settlement window is when the majority of that is taking place. And back in the day, used to be guys in yellow coats yelling and screaming at each other before the floor pits would close. And then they would tally up all those orders and give the average and print that as this is today's settlement price, not the last order that was filled. And so it's a whole different process that still exists because it's a blend of the old way to do stuff and the new way. Like if you had this like settlement mark on close orders and futures market where they print that thing and then right at 5 o'clock, you know, futures market the Globex would close with a large candle. It doesn't do that, right? The Globex mirrors the stock market, especially in the S&P futures, and the high volume, as you see on my chart here, day to day, the large high volume candles or the highest volume tend to come right when the equities market closes and the futures still trade for an hour. So it would be very arbitrary for them to base a settlement price to quote the entire world what a barrel of oil would be based on such little participation, right? So there is a window inside of here that they do that VWAP to accurately assess the value of what funds believe the futures will be valued at, right? It's not the close, it just is TradingView's ability of giving you a close price, because it is called the close price in the spot world. What is today's closing price? Well, before we use close in the equities language to say the close of the exchange, right? So the close of the exchange is right here as well. That's why I use close for both of them. But appropriately so, the close price of futures is technically the settlement price. It's confusing as hell, and that's kind of the confusing part. You have the Chicago region and the New York region all create a different lingo for their stuff. So if you're using close price with many platforms, close will likely present either one of 3 things, and they're almost always wrong. One is they will present the equivalent 1500 hours Central or 1600 hours Eastern final candle price, right? The close of the equities market, the close of the New York Stock Exchange, and then they'll tell you the value of the futures at that same time. That's an arbitrary number that means nothing. Future settlement, every contract settles differently, but it's a 30-second window right here that calculates the settlement price, and that's typically presented as quote-unquote the close. Other closes will present the close of an exchange session, which is the last candle. So we call it close of the exchange so that it mirrors close of, or we say Globex close. It's actually a halt for an hour, or actually it shuts down for an hour, and this is the candle. So you must go there and get that number. There is no definition for this in a traditional textbook. This isn't called the close price. The close price typically means the settlement price. So if you go grab the settlement price, it's actually something that you can't see in the candles. It's done off the books and spit out as a number on the CME site. And you'll see you can come down here, probably will say open, high, low, prior settle, right? So the prior settle of the current contract looks like yesterday's settlement was the 20th. Okay, that's updated today. Prior settle 39.00, right here. 39.99. But as you see, that's not 39.99. That 39.99 is calculated in the 30-second trading period here. It's a pretty cool thing, and I know people have asked me to teach a futures class to instruct on all these things. Right here. And you can see this is the 30-second window is right here between 15:14:30 and 15:15. The 30-second VWAP of those 30 seconds is the settlement price. You can see my mouse is circulating around 39.99 and some change. That's where that settlement comes from. And the weird thing about settlement is that every contract is different. Oil settles at a different time. S&P settles at a different time. Because they all came from different exchanges. You always had the NYMEX, the COMEX, the CBOT. Each exchange had their own rules of operation. They were different buildings that people would go to trade at before you had computers. So each one had its own rules. So that makes it even more complicated. So whatever you're trading, just understand that there is, and now the CME group basically runs and owns all the exchanges. They all have different rules still. They didn't change the rules because everyone's doing their job a certain way. And so you can see that this more represents that 39.99, not this. But the DD band exploits this. I promise. Just... Hey. Are y'all? Love it. Everybody, head on over to Discord really quick. We're gonna call it a day. This is awesome. We had a 20-day streak now. Awesome. Traded rational. Market went rational very quickly. I'll explain all my moves today in today's session. Everybody do the extended trial if you haven't checked it out. We'd love for you to check it out. Come on over. This link right here, it's coming in chat or it's down in the comments in the description below. $35 a month for a full education. Okay, that's not how you spell it. Oh, you go here really quick. Hold on. There you go. Click that right there. And we'll see you guys. Come over to the Discord. We're going to be all an hour and a half to kind of come in and get settled. We'll direct you through everything you need to go. And we'd love for you to check it out. Like I said, be in the inaugural push of this extended trial 6-week training program. We will grill and drill, and you will learn everything that we teach. And then you can keep it or be on your merry way. There it is. Take it out. Click that link. All right, see you guys later. Later, Mansoor. Later, Bright. Later, Brian. Brian, it will be in the Zoom links. Okay. All right, we'll see y'all.